Hello and welcome to the Astronomy Management Pre-Scene video analysis for the May 2016 exam on Opticians IC Optical. So before we begin, I'm just going to start by telling you a little bit about myself and a bit about how we are going to approach the pre-scene and the things we're going to be looking for. So my name is Peter Steffer. I am the Director of CIMA here at Astronomy. I've been with the company since 2013, and during that time I've written and marked many of the mock exams that we provide, and I've also written mocks for other tuition providers. I've also written many of the study texts that you may have used. And if you see in the bottom left hand corner there, my Facebook page, on the run up to the exam I'll be posting all kinds of hints and tips. So now let's take a look at the video series themselves. So for starters, I'm going to go through the pre-scene section by section, picking up on all the key points, the things that you should be looking for, the things you should be pulling out of the text and analysing. I'll then be applying them to the case itself, what they mean for the company and what it means for the industry that it operates in. Applying certain business models to it, ones that you may have learnt in your objective test studies, and the likely exam issues. So looking at it and thinking, based on this information, a likely question is X. And also other just hints and tips, general things that will help you gain extra marks in the exam. I'll then go on to my strategic analysis video, which will be taking the pre-scene as a whole and summarising it and applying it into lots of different key business models and key business theories before rounding up with my top 10 issues. So these are the most likely things I think are going to come up in the actual exam. So how's it going to work? As I said, I'm going to go through it section by section. I'm going to assume that you haven't read the pre-scene. I'm going to assume that this is all new to you and we are going through it together for the first time. And what I'm going to do is I'm going to ask you to make notes yourself. So I'll stop the videos at the start of each one and ask you to make notes on a certain number of pages, and then we'll go back and review it together. And as I've said, at the end we'll go through a full strategic analysis and top 10 issues. So first of all, some key things that you should be aware of. Now the pre-scene is the context of the exam. It's the context of the company that is being examined. The background information, as it were. So once you've read the pre-scene, this should all be forming a foundation in your mind. And when you go into the actual exam, all the unseen questions that come up in the actual exam, you should be answering them based on this base context from the pre-scene. But it's worth noting that you shouldn't write anything based on the pre-scene. And that's because you're not necessarily going to be tested on something that's in the pre-scene. You'll be tested on the unseen material that you are given in the exam. If that unseen material is nothing to do with the material in the pre-scene, then you shouldn't be using the pre-scene material to answer the question. You must always use the unseen material. Having said that, you should always be thinking about the pre-scene material. Now, you're given this in advance for a reason. You're supposed to learn it and you're supposed to gain as much understanding as you can about the company so that you can use this information in the actual exam. So let's begin. Now, many students make the mistake of skipping ahead to the financial statements and the other more bitty pieces of information when they're looking at the pre-scene, and they often skip past the first few pages, which they sometimes look at and think it's just introduction, it's just filler, etc. But actually there's quite a lot of information within the introductory pages that will help us and give us some context as we continue to look through the pre-scene. It sets the foundation for the pre-scene itself, just as the pre-scene sets the foundation for the exam. So let's start by looking at the first page here, which is on job description. So this is the role that you are playing within the MCS exam. And we can see that we are a financial manager. So when you're thinking about your levels of control and levels of hierarchy within an organization, we're sitting in the middle. So we're taking information from the operational level, from the day-to-day level, and passing it up to the strategic, the decision-making level, and vice versa. So that gives you an idea of the kind of jobs that you'll be asked to do and the kind of issues you're going to have to talk about. And ultimately, the end game of it is that the information you provide up to the senior financial manager and the financial director is going to help them make decisions. Now, we know the company that we work for is Optical, and what they do is sell glasses and contact lenses. Now, when you see that the company produces more than one product, you should automatically be thinking about costing and product profitability. Now, for example, if contact lenses are far more profitable to produce or to sell than glasses, then could it be that we need to put more resources into selling contact lenses? Of course, you also have to think about the revenue generated from each one. Even if contact lenses are more profitable, but a huge proportion of revenue comes from glasses, then we cannot ignore glasses. We can also think about things such as the product life cycle. Are contact lenses becoming more and more popular? And as such, are they slowly phasing out glasses as a result? Is the glasses market more mature than the contact lenses market? And then on top of that, we can also drill down into these particular products such as glasses and contact lenses to see whether certain individual products within each of these broader product lines is more profitable, or assess how the company competes. Now, for example, glasses come in all shapes and sizes. You have very expensive branded ones, and you also have very generic ones. So which of these does the company produce, or do they produce or sell a range of them? And if so, which ones sell the best? And the type of product that they sell also dictates the marketing strategy. For example, if Optical sells very generic glasses, then perhaps it competes on price. If it sells very fancy glasses that differentiate themselves from others on quality, on the styling, things like that, then perhaps they are pursuing more of a differentiation strategy. So this ties in with your Porter's generic strategies. And the company sells these products through a chain of high street opticians. So of course this is the product place, as it were. And it makes sense. A lot of people would go to a optician's to purchase a new pair of glasses. However, is this their only route to market? There are many ways in which a company can sell glasses these days, particularly if the patient or the person purchasing the glasses already knows what kind of lenses they need, for example, if they're short-sighted or long-sighted. And if they already know exactly what kind of glasses they need, they don't necessarily need to go to an optician's to be tested and fitted for a pair. They could purchase them from another outlet, another route, such as online or in a larger retailer. If you go into many pharmacies and drugstores, or even into supermarkets, quite often they will sell a range of glasses. The second paragraph here then goes into a bit more depth about what you as the financial manager actually do for the company. So it starts off by saying that you help prepare the annual budget. So of course, when you see words like budget, you must be thinking about budget methods, all the different ways in which a company can budget. Do they use standard costing? And which particular type of budget do they use? Obviously, there are the three main types of budget that you will have learnt in your CIMA study so far: activity-based budgeting, zero budgeting, and also incremental budgeting. So with that in mind, it would be useful to read up, revise on the different types of budgets and the advantages and disadvantages of them, and apply them to this case. Now, an example of this could be incremental budgeting for a new product. Now, as a lot of incremental budgeting is based off of historical data, if you have a new product or there is a new set of circumstances, which means that using historic data would not be appropriate, then that's not the right type of budget for the company. It also says here that you'll be involved in costing and pricing. So thinking back to your costing and pricing strategies revision as well, and coming to a decision on which one is most appropriate for the product, appropriate for the brand, appropriate for the company. Now, for example, earlier on, I just spoke about glasses and contact lenses, and also the various types of glasses and contact lenses that the company sells. Now, it could be that a particular type of contact lens is far more expensive to produce than all the others. And so it may be useful to use some sort of activity-based costing to discover which is the most profitable, which one costs the most. And again, if, for example, they do use an activity-based costing method, but there's little difference in each one, then perhaps it would be cheaper and easier to use more of a basic absorption or marginal costing method. And with pricing strategies, you'd want to think about what kind of product the company is selling. Is it competing on price? Is it competing on quality? If it's competing on quality, then perhaps it would be better to use a premium pricing strategy. If they're competing on cost, then perhaps it would be better to use a low costing strategy. Of course, the disadvantage of competing on cost is often people will become accustomed to buying your product simply because it is cheap, and therefore you may not get any brand loyalty, as they'll jump to the next company that comes out if they are cheaper than you. Optical might also want to consider bundle pricing and offers such as buy one get one free when it comes to products like this. As you can imagine, if you wear glasses, or even if you don't wear glasses, you probably have several pairs. It could be that you need certain glasses for different things, or you just have one as a spare in case you lose the other or the other gets broken. So people may want to be buying more than one of the same product. So that's our role out of the way. Let's move on to some information on the company now. So we can see that the company was established 30 years ago. So the company's been around for quite a while. So it probably has a good idea of how it works. Now, this can be a good thing, as it has experience in the market. It's a marketplace that it knows, but at the same time, it could be blinded by experience. Now, what I mean by this is that the company has got so used to doing things in a certain way that it doesn't think to change in any way, even if the environment around it is changing. And it was founded by Irene Carruthers. Now, whenever you see information about a founder, you always have to think, are they still involved in the organization? And if they are, then that could be a critical success factor to the organization, because often founders of companies are the driving force of a lot of the company's innovation. And also whether they're still involved with the company on a day-to-day basis, or just as, for example, a majority shareholder or a large shareholder, they're also could be considered a key player in the Mendelow's matrix. So these, of course, are people and organizations that we have to pay particular interest to when we are devising strategies and plans for the organization. And it had humble roots, starting with just a single store in the capital city of Zealand. But in the space of 30 years, they've grown to over 760 stores. And part of this growth has become is due to working with her husband, Chris. So potentially that's another key player in the stakeholder matrix here. We can also see that they have these stores all over the different towns and cities in Zealand. So there's good visibility of the brand, and also a lot of locations. Now, opticians obviously are the kind of places that people have to go and visit. So you couldn't just have one location that deals with people all over the country. You need to have a local shop for every person, as it were. And something like an optician's, which of course deals with people's eyes, and people are very sometimes squeamish about their eyes, and eyes are obviously very important to someone. So the customer satisfaction is very important in an industry, in a business like this. The customer needs to feel safe and secure and not stressed. So from that point of view, as a non-financial performance objective, the consumer, the customer perspective needs to be looked after, and we need to ensure good customer service and the customer feels safe and secure. What's also very important is that the company is listed on the Zealand Stock Exchange. Now there's a lot we can read into that. For starters, we know that it is a public company and therefore should behave as a public company. So by being listed on the stock exchange, there's also more accounting standards that you have to adhere to, because you have to publish these accounts publicly. And there is also more regulations than a private listed company, because of course you need to ensure investor confidence, but that's also an ethical point as well. So the company must consider good ethical treatment of its various shareholders when it's coming to decisions. Now, one decision could be whether to raise more money by selling more shares, but of course many other shareholders may not appreciate this, because it in a sense dilutes the value of their shareholdings. If you have 100 shares in a company and one shareholder owns 25, then they own a quarter of the company. If you decide to release another 100 shares, then of course that 25 is now only worth an eighth of the company. Shareholders of course also go onto our Stakeholder Matrix. If they own rather small shares, small proportions of shares, they would perhaps only be in the high interest, low power stage. But if they are significant shareholders, you're only more institutional shareholders, for example pension funds, then they have both a high interest and high power, so they would be in the keep close category. But shareholders aside, it does also mean that the company can raise funds in this way. They can raise equity financing, which of course being different from debt financing, which whilst is often quicker and doesn't involve you giving up control of your company, it is also harder to raise a lot of money in that way. And also, unlike dividends, interest payments are mandatory. And of course, you can only take on additional debt funding if your level of debt funding is not already too high, or if you have assets to secure against the debt. Another issue that may come to light, given that the company trades on the stock exchange, is of course dividend policies. Now, dividend essentially is money paid out from profit of the organization to shareholders. And of course, this also creates conflict within different shareholders. Some shareholders will want dividends and some won't. Now, for example, if you are a young professional with a well-paid job, you may not want a dividend payment because of the high tax on them. However, if you are retired, you may be using your shares, using the dividend from those shares as a source of income, so you would want regular dividend payouts. And dividend policies are important because they can often affect the share price of the organization. Now, if you pay out dividends, sometimes it can cause your share price to drop. A, because the pure value of the company is perhaps less because you have paid out all of this money that was once the company's, but also sometimes the market will look at it and think that your company has no new ideas, nowhere to invest in, nowhere to go, and that is why you are paying off all your excess money. And one more point relating to the fact that they are a public listed company is that the shareholders may want the board to adhere to the various standards of corporate governance, which admittedly is only essential or only necessary for public companies in the UK, but the theory behind it is fairly sound and what many shareholders would want any company to be run by, because it in a sense is the correct way to run a company that is fair for all stakeholders. So it's also important from an ethical point of view. So next up, we have some information on IC Optical's place within the market. You can see that IC Optical is the largest opticians in Zealand. So from a SWOT point of view, that is a strength of the organization. And also from a market perspective of your non-financial performance indicators, the company is doing well because it has the largest market share. And its main two competitors are NewSpecs, who compete directly with IC Optical in that they are another high street chain of opticians, and Zimchem, who are chemists who provide optical services. So, for example, this would be like going into a Boots store or a Superdrug store in the UK and also finding opticians within the shop. So when we're thinking about our Porter's 5 forces, our competitive analysis, we know that we are the top company within the industry, but there are also 2 large competitors. And also, given the nature of the industry, given the nature of the resources required for opticians, you may also find that there are many smaller independent opticians run by qualified optometrists. And finally, on this page, we have some information about the workforce and the locations of the head office. So we can see that the head office is based in the capital city. So what that means is that there's perhaps a larger pool of talent for more business roles. Take, for example, the City of London. The City of London is very, very popular with graduates. That's where a lot of the companies in the United Kingdom and indeed in Europe set up their head offices, because they know that all the top graduates from UK universities are going to flock to London. Where this becomes a problem is with your smaller outlets in more rural areas, where people perhaps don't want to relocate to. And this being particularly a problem for a company such as IC Optical and for an industry such as opticians, because of the fact that you cannot just have anyone running a shop. As it goes on to say here, an optician requires technical optical knowledge. You will need qualified opticians within the shops, because by law, someone who has not had the training cannot practice, a bit like a doctor or a dentist. Also, given the high caliber of the employees needed for the company, it's likely to mean that the staffing costs are very high, as qualified optometrists and experienced store managers will perhaps command far higher salaries than your average shop worker. It also means that the span of control within each individual shop is far smaller as well, because if the opticians only has few employees, but at least 2 of them have to be highly trained, highly experienced personnel, then you won't receive the cost economies of scale, so to speak, when it comes to salaries that you might see at a supermarket. Now, for example, at a supermarket, you still may only have 1 or 2 experienced managers, but between them, they can manage a very large workforce. So now that we've looked at your role and also the company, let's look at the final page of introductory material, which is on the country itself, Zealand. Now, firstly, kicks off by saying that Zealand trades in the C dollar. Now, whenever you see any information about currencies, you should be thinking about economics in your pestle analysis. And also politics, because of course the government has a hand in setting things such as interest rates and inflation rates, which could all have an impact on IC Optical's business. Now, where this becomes an issue is, for example, if IC Optical had large amounts of debt funding and debt financing. Now, if interest rates were to increase, then the finance costs of the organisation would increase as well. And of course, this would have an impact on the profitability of the organisations, which in turn could upset investors. And one other thing to think about when you think about currency is also exchange rates. Now, we haven't got any information at the moment other than about its activities outside of Sealand. At the moment, all we know is that they sell within opticians, high street opticians within Sealand. Now, if they were to start selling their glasses or their contact lenses, if they were well renowned in other countries, and they started selling them in those countries or online to those countries, you'd have to think about the exchange rate. Now, exchange rate is basically the value of one currency against another, and that currency goes up and down all the time depending on the current economic state of each particular country. Now, the issue with this is that if the exchange rate of, say, the C dollar against the regular dollar or the pound or the euro, etc., was weak, then when IC Optical was selling abroad, it would be losing money on its sales in comparison to just selling them within Sealand. And obviously the flip side of that is if the exchange rate is in the C dollar's favour, then they will be gaining money. And one way in which you can combat the risks of these as part of your risk management strategy is to lead or lag payments. And these essentially mean you either bring forward the time of payment or you push it back, depending on whether you think the exchange rate is going to change, so you get a fairer deal or a better deal on the exchange rate. And also we see that Sealand has adopted the International Financial Reporting Standards. So this means that the company will also have adopted the regulations required by the International Financial Reporting Standards in their accounts. This is all to do with the way in which they do their financial accounts. And of course, we'll see more of that later on in the financial statements video. But what it does mean is that given that Sealand itself has adopted these, the chances are that IC Optical are preparing their accounts in the right way, which of course we know is doubly necessary given that they trade on the stock market. And finally, some information on the demographics of Sealand. So Sealand has an older population. The people over 65 outnumber the population under 16. So of course this could be very good for companies such as IC Optical, which sells glasses and contact lenses. People who have had healthy eyesight their entire lives often will require glasses at some stage as they get older. So it does mean that in a sense the number of people requiring glasses, requiring contact lenses is expanding. But of course, as the pre-scene says here, that an aging population puts additional pressure on things such as healthcare and social services. Now, given that our opticians often they work with the National Health Service within the country. If there is a National Health Service in Sealand, we don't know at the moment, but we do of course have some information that they do have healthcare. Now, if you think about this from, say, a UK perspective, where you have the National Health Service, we see in the news all the time that they are under constant pressure, constantly going over budget, needing more money, etc. Now, if the National Health Service is one of IC Optical's biggest customers, for example, in a lot of countries with healthcare systems, they offer free glasses for people under 16 or free glasses for people who are retired. But of course this has to be paid for in some way, shape or form. So often what will happen is the company will then invoice the government for the glasses that is given to the patient. So if this is true for IC Optical, and then the government is one of the biggest customers in a sense of IC Optical, then if IC Optical, the the government doesn't have as much money, if there's more pressure on the government, it doesn't have as much money to set aside for healthcare, such as glasses, then that could be damaging to the company, because in a sense, one of its biggest customers would not be purchasing as much product, purchasing as much services. And ultimately, would people be willing to pay as much money for glasses if they had to pay for them themselves? Or if, for example, they were going through a private healthcare service such as Bupa, would the private healthcare service be willing to pay so much for those glasses? So I hope you've enjoyed this sample video and more importantly found it useful. Before I go, I'd like to quickly tell you about a few of the products that we do here at Astranti Financial Training, specifically for our case study courses. We have a study text which details all the key theories in which you will be expected to use in your case study exam, as well as details of how to approach the pre-scene and the case study. We also have a series of course videos detailing how to answer case study questions. This is actually an area in which many students struggle. Most of the scripts that I've seen, the failing scripts that I've seen, has actually been due to poor case study technique rather than lack of knowledge. We also have a series of pre-scene analysis videos based on the current up-to-date pre-scene, detailing all the key bits of information and likely issues you may face in the exam. Next up is the industry analysis, a pack detailing information about the industry that the pre-scene company resides in, information about the key players within that industry, and more background information on the industry in general. We also have a range of mock exams created for each level and based on the current pre-scene, which is a great way to get some practice in before you sit the real thing. We also offer marking and feedback on those mock exams, so you can see where you are going wrong and where you can improve. Finally, we have the master classes. These are 2 one-day classes taken by our expert tutors to give you all the hints and tips you need to really add to your chances of passing the exam. Also, if you take our full course, we offer a pass guarantee, which, provided you have met all the requirements of the pass guarantee, you will get a free resit on the next exam should you fail to pass. So once again, thank you for your time. If you're interested in any of these products, please visit the website www.astranti.com for more information. Thank you.